from where you sit.
Today on the Trading Bell, I am at the headquarters of British American Tobacco, and I'm going to be talking to the managing director, that is Beverley Spencer-Obatoyinbo. Well, of course, we're going to be talking about the fact that BAT has posted a 22% increase in profit after tax for the year ending December 2018, as well as some of the factors surrounding the industry at large, as well as what BAT is doing in order to contribute to the manufacturing agenda of the Big Four agenda set by President Uhuru Kenyatta. Well, all this and more coming up on this episode of the Trading Bell. I'm Maalika, Kazia. Welcome. Why don't we get started? Beverley Spencer-Obatoyinbo is the Executive Managing Director for BAT Kenya. Beverley most recently held the position of BAT Area Director Swiss Cluster based in Switzerland. She joined BAT in 1996 from the pharmaceutical industry. She has held various senior roles within the BAT Group, including Marketing Director BAT Nigeria, General Manager BAT Egypt, Area Director for BAT West Africa Area and Head of Human Resources for BAT East Europe, Africa and Middle East Region. She is currently also the Area Director for BAT East and Central Africa Area based in Nairobi, and is the chair of the Kenya Association of Manufacturers Multinational CEOs Caucus. Thank you so much for making time for us.
A pleasure. Nice to have you here.
Awesome. So we do know that, of course, you have had about 50 years of listing on the NSE this year. So what are some of the milestones that BAT has achieved throughout this time period? It's quite a long time.
It is a long time. It's a very big landmark, I think, for the business, and one that we're very proud of. I can go back even further, believe it or not, to 1907,
wow,
which is when BAT Kenya first started as a business in various guises in the tobacco industry in Kenya. And we listed in 1969 on the Nairobi Securities Exchange. And then 1975, we started to grow tobacco in Kenya. And a couple of years later, we put the what we call our green leaf thrashing plant in Thika.
Okay.
And that led to, I would say, a much more established business here in Kenya. After the GLT was put in Thika, we actually used wood to process the tobacco. So we started to replant trees in Kenya because we obviously did not want to damage any of the forest cover in Kenya. Since 1978, we've planted over 50 million trees in Kenya to replenish any of the stock that we've used. So I like to talk about having one tree or more than one tree for every Kenyan in the market today, so which is a good story. There's some other great things that have happened recently. So last year we won Top Employer, but this is with an international institute for employees in Kenya, but also in Africa. So Kenya represented under an African system, and also the Federation of Kenyan Employees voted as best employer 2 years in a row. So last year was the second year. So I think that just shows you that the environment that we've provided for our staff to work in and the sustainability of the business has really come through over the years, and it's really a great place to work.
Amazing. So, of course, you've talked about the circular economy, reforestation, as well as the employability of BAT. Yeah. But let's talk about some of the numbers. You posted a 22% increase in profit ending December 2018. So what are some of the factors surrounding that growth that you were able to achieve?
Yeah, so 2018 was a good performance after quite a difficult year before. So we posted 22%, as you said, profit after tax, which took us to around about 4.1 billion Kenyan shillings. So it was a good year, and this is really on the back of three main things. So an increase in demand for our semi-processed leaf that we export outside of Kenya. We have also taken pricing due to excise increases here, which has obviously driven the profitability on the back of excise increases. And also we've been able to reduce our financing costs, which is a big hit usually on the bottom line. So we've had a good performance in three main areas. And I think looking forwards, it's a great foundation, I would say, for further growth looking to 2019 and beyond.
Okay, and of course you're a market leader, but we have seen that you've cited illicit trade within Kenya being a major issue. You also said about 12.4% of all cigarettes sold in Kenya, the Kenyan market, are illicit, and the government is losing about 2.5 billion shillings in annual revenue because of this. So what are some of the ways that you think the loopholes need to be sealed in order to prevent this sort of thing from happening?
Yeah. It's a really big issue, and you'll have seen in the press over the last 12 months or so the amount of noise around illicit products and some counterfeited other categories in Kenya.
True.
It's actually 14.1% of the market is now illicit cigarettes. So what that means is that it's a range of products being sold that have ultimately evaded paying tax. And therein lies the problem for the government and their revenues. So we estimate it's more than 2.5 billion shillings a year that they're losing. And so we've been working very closely with the relevant authorities, so the Anti-Counterfeit Authority, KEBS and the KRA, to provide them with data that we get independently of the Kenyan market to show them where the biggest issues are. And to try and guide them in terms of how they can have the biggest impact in the illicit space and really get some control on the situation quickly. Our recommendation is that they try to go to the source, so the root of the problem. Who is manufacturing these products? Who are the manufacturers that are evading the tax and putting fake tax stamps on product, or the product is not going to the destined export market, it stays here in Kenya having not paid the requisite taxes. So really go to the root of the problem. It's a lot faster if you can do that, rather than going to the retail trade where you're already trying to get to thousands and thousands of retailers.
True.
It's a very fragmented approach. So really, straight try and identify the source of the problem. And that's what we've been recommending now for over a year. And sadly, since our last data read of 2017, it's increased from 12.4, as you said, to 14.1%. So with even all of these activities, we're just not seeing the impact yet in the marketplace, and it is affecting the legal manufacturer's business and the revenue for the authorities.
So it is eating away into the revenue, of course, of the legally established businesses as well.
Yeah.
And so, like you said, you need to go to the source and the root of it all. So away from that, of course, you do focus on offering quality products to your adult consumers, and you have continued to deliver against your strategic priorities. But what are some of your short-term goals as of 2019 to try and even push further when it comes to BAT?
Well, the great thing about BAT Kenya is it's part of the broader British American Tobacco Group. So we have a lot of support from the group in terms of what we would call our portfolio transformation. So really trying to identify what the consumer trends are in the marketplace, how consumers' habits are evolving over time. And because of the size and the scale of the group, we now have access to some potentially reduced risk products, as well as the more traditional cigarette space. So if I look at 2019 and beyond, perhaps we have quite a big agenda to really start driving our transformational strategy, which will offer consumers more choice, reduced risk products potentially, and also greater innovation. So those would be our three areas that we'd be focusing on as a business.
Okay, fantastic. And when it comes to establishing what your consumers want and what they're willing to, deviate from, how do you establish those sorts of, benchmarks so that you can be able to better cater to them?
So within the market, we do run regular research to try to understand not just the tobacco space, but larger consumer trends. And obviously now with the advent of the social media space, you can actually see quite easily where consumers are moving and therefore where you should be looking to take the business to drive sustainability, firstly for your shareholders, for the staff, but also for society. I mean, I do think it's our responsibility that as consumer trends change and people look for products that will bring some level of harm reduction to the way that they have been smoking cigarettes, that it's our responsibility to step into that space as quickly as possible. And bring those new choices to consumers.
Okay, and if we look at the Kenyan eco space at large, we do know that the President's Big Four agenda focuses on manufacturing, and especially as such a big player in this industry, what sorts of things do you want him to address in order to make manufacturing a lot more streamlined and a lot more easier for companies such as yourself?
Yeah, we've been very heavily involved with the manufacturing agenda and President Kenyatta's Big Four piece since the presidential roundtable session last year. I think it's absolutely essential that all of the big manufacturing companies really get involved and set the agenda really, so that smaller manufacturers can sort of follow in the wake. So I think the most important things for us would be, first of all, to really get a grip on the illicit space, because then that gives the legal manufacturers the chance to grow into the space that was once illegal. So
True.
First job. And that will mean that the legal manufacturers have the chance to grow and thrive in a space that was being filled by illegal products. Second of all, I think the space, so ease of doing business is critical for businesses. So transparency in the taxation space, dialogue with the relevant authorities, with the manufacturers is critical. And I work extremely closely with the Kenyan Association of Manufacturing, so that I'm part of making recommendations for driving ease of doing business within the Kenyan setting, so that we can start to see the contribution of manufacturing here growing. We know that the government has a target of 9 to 15% of GDP, and we're lagging at the moment, so we've still got a long way to go, but we want to be part of the success of the future, so we're very much involved in that story.
Okay, fantastic. So thank you so much for speaking to us today. And of course, what would you like to tell your shareholders finally, just as we wrap up?
Well, first of all, I was extremely happy to see a lot of our shareholders at our annual general meeting last week. We were really happy to share with them the good performance of 2018, and I'd really want to give them the confidence that they've invested in a great company. The future looks extremely good for BAT Kenya, and with our advent into the Transforming Tobacco agenda, I think it gives even greater confidence for a longer future and a more sustainable journey going forward.
All right, thank you so much for speaking with us today on The Trading Bell.
Thank you, pleasure.
All right, on that note, we're going to take a look now at the markets.
As the prices go down, you get more and more attractive counters that you can actually venture into. So in as much as it's a bearish market, it still provides an opportunity for value investors who are long-term oriented to come into the market.
It's time now for the market analysis on this week's episode of The Trading Bell. And joining me is Harrison Gitau, the Head of Research at Apex Africa, to break down some of these figures for us. Welcome, Harrison.
Thank you very much.
All right, so let's get right into it with our gainers, because this week we have seen Kenya Ray Insurance Corporation actually see a change of 34.25%.
Yeah.
What are your thoughts on that particular shift?
For Kenya Re's 34.25% increase in price has been attributed mainly to the 3-for-1 bonus issue that they announced. So that has caused a bit of excitement in the market. It is anticipated. But on the fundamental basis, it's just leaves the shareholder at the same level as he was before. So it's just excitement that we expect to die down once the share goes ex-dividend.
Okay.
Yeah.
And another gainer that caught your eye earlier, you were telling me, is CIC Insurance Group.
Yeah.
We've seen a change there of about 12.91%.
Yeah. For CIC at 3.33 shillings, the price was just too low. I think at that level it found a very huge amount of support, and the resulting demand just resulted in a very significant market increase. Also, the insurer is also considering opening operations in South Sudan. So no, not South Sudan, in Ethiopia. So that has been quite well received in the market. So that's a plus.
All right. Well, on to our losers now. I&M Holdings Limited there, seeing a change of 49.79% downward trend.
Yeah. For I&M, it has just closed. It just closed ex bonus. It issued a 1-for-1 bonus issue. So at 60.25, basically it's trading at the same market cap. So on a per share basis, it seems as if it has gone down, but on a market cap level, it's still at the same level. So, yeah.
Okay, and finally, one of the other losers is Kenya Airways, again seeing a downward shift of about 11.73%.
Yeah, for Kenya Airways, it's a bit unfortunate. Them trading at 3.58. We were a bit optimistic of the direct flight to the US. We were a bit optimistic about the debt conversion into equity, but it hasn't really paid off. And the current price decline, I think it's going to go even further. So it's not a counter that it's quite exciting in the market.
So especially after, of course, they released their results and they had a loss of about 7.5 billion.
Yes.
So that's quite a mammoth amount there.
Yeah.
But let's take a look at some of our movers. We're seeing Safaricom, we're seeing Equity, KCB. Any thoughts on our top movers? Safaricom is usually one of them anyway.
Yeah. For the top three, the main concern is their foreign exposure. They're very attractive to foreign clients. There's been a lot of jitterish among the foreign investors concerning the global geopolitical developments. There is a bit of tariff war with US and China.
Yes.
So foreign investors are a bit skittish. So they're exiting emerging markets, and the three counters are suffering as a result.
Okay.
Yeah.
And also our index, you know, we keep seeing this downward trend every week, about -6, -5. Is it very significant?
-6 is quite significant. Range between 0 and 2 is considered not as significant, but more than that is quite huge. We are in a very bearish market. We have firms that are really struggling in the market, so it's understandable that the market price will also take a hit. It's most investors are actually taking hits, so some of them are actually want to catch the bottom. So as the prices go down, you get more and more attractive counters that you can actually venture into. So in as much as it's a bearish market, it still provides an opportunity for value investors who are long-term oriented to come into the market.
Okay.
Yeah.
And aside from our numbers this week, another development that, you know, had a lot of analysts especially talking was one of the things with regards to the Eurobond, because of course Kenya issued a third Eurobond, and that was this past Wednesday, and that was for about 210 billion shillings. So that's to the UK and the US investors. So, you know, with the skepticism is quite heavy, because we've had about, in the past 5 years through Eurobonds, we've accumulated close to 600 billion shillings through those. So what are your thoughts on the trajectory for how we're going to fare with this Eurobond and the foreign debt that we keep on, you know, mounting on and on?
In terms of the sustainability, I think from the government's perspective is that the amount of interest that the Eurobond actually raised in the markets speaks volumes about Kenya's ability to pay its foreign debts. That's from the government's perspective. But from our perspective, we are more concerned about our inability to actually meet the expenditure that we have. We are running twin deficits, fiscal deficits and current account deficits. So that's not a very colorful picture to have. For the Eurobond, it's positive for us in terms of the currency, because it just shows up our reserves. So that's a plus. It's a plus that we can look into. But I think the government should be even more concerned about its ability to raise tax revenues. In as much as we look at GDP debt to GDP. GDP doesn't pay taxes. GDP doesn't pay back debt. It's about the taxes that pay back debt. And as our GDP grows, we've seen a drastic contraction in tax to GDP portions, from highs of 25 to about 18%. So that's not positive. And it's about our economy is more led by public infrastructure, public spending. So for the government to be able to raise revenues, there needs to be more of economic stimulus to the market, because in as much as the economy is growing at 6.3, projected to grow at between 5.5 and 6% this year, it's still not felt across the board. So there needs to be much more done by the government to actually raise its revenues and to make sure that the economic growth is felt across the board.
Okay, but even as we, look at these matters, another thing that's cropped up this week was the Serianu cybersecurity report saying that Kenya loses close to 25 billion shillings, to cybersecurity threats. For 2018, that was roughly the amount that Kenya lost. So especially when it comes to financial systems safeguarding themselves online, because everything is, shifting towards that paperless future that we are going towards. Yeah. So what are your thoughts on some of those financial institutions and how they can cushion themselves from these sorts of threats?
For the financial institutions, the best thing they can do to cushion themselves is actually to hire talent. Whatever we are losing in terms of cybersecurity is as a result of human interference into our systems, and we also need the best brains out there to actually safeguard the monies that the institutions hold for the clients, and actually to build trust and enhance efficiency.
Okay. Yeah. And even as we keep on looking at the markets, of course, shifting and so on and so forth, what are your projections for some of the other companies that are waiting, of course, to release their Q1 results? We did see BAT release their results recently, and they had a 22% increase in profit compared to last year. But have you noted something in particular about the companies that have come out with their Q1 2019 results being more or less than expected?
For the Q1 has been a bit mixed. Stanbic obviously above expectations. Equity mainly in line with expectations, though marginally below what investors expected. NIC is just way below expectations. The decline was not something that the market expected. So it's a bit of a mix and match. So it depends with the company's policies, mainly with the banks on matters to do with their loan loss provisions, how they grow their loan books, how they shift in strategy mainly from treasury papers to aggressive lending. So it's a bit of a mix and match. So for some, we expect some improvements, but for some, not so much.
So even as we talk about the banking sector, I think one of the mergers that has been scrutinized very much is NIC-CBA. Yeah. And then we've also got a lot of other banks expressing interest in taking over smaller ones. Yeah. So where is the banking sector then heading, in your opinion?
Increased mergers and consolidations. That's definitely what we've been saying all along. The day has come that we are seeing the reality. But some investors are actually very excited with the mergers because it's a bigger entity, ability to harmonize on synergies and all that. But there are a few investors who are a bit skittish on the payment procedure of the acquisitions because it's mainly by share swap. So that definitely just increases the equity, and the resultant entity is not projected to grow revenue, to grow its bottom line as fast as equity. So that will have an impact on the resultant entity's ROEs. So that may have a dampening effect on the market.
Okay. Yeah. Well, thank you, Harrison, for that in-depth, analysis that you've given us. But for now, it's time to get into Markets 101. All right, time now to take a question from you. Of course, you can always tweet it to us. And the question today from Annette is, what is a bonus issue and how does it benefit shareholders? So we're going to let Harrison, of course, answer that for us.
Thank you, Annette, for the question. The bonus issue has been created by interest from Kenya Re and also I&M that have recently issued bonus issues. Ideally, it just increases the number of shares that a shareholder holds, but the underlying value is not meant to change. On accounting terms, it just moves funds from the retained earnings reserve to share capital, mainly to boost up the company's share capitals. But in the market, it creates a buzz. So that buzz creates capital appreciation, and that's basically largely how shareholders benefit.
All right. Well, Annette, I hope that one answered your question. And of course, you can keep on sending them in to us as we keep on answering them next week and so on. But for now, let's take a look at the NSE historical facts. And that's all we had for you on this episode of The Trading Bell. Of course, we had an intriguing conversation with the British American Tobacco Managing Director, Beverley Spencer-Obatoyinbo, as well as some in-depth market analysis with our analyst of the week, that is Harrison Gitao. Thank you so much for joining us.
Thank you for having me.
All right, on that note, of course, I will remind you that we do have some fantastic pages on social media, so they're appearing on your screen. Those handles is how you get in touch with us and keep up with The Trading Bell. For now, that's it, and I'll join you next time. My name is Maalika. Kazia.